Global markets mixed ahead of U.S. jobs report. Wall Street stocks finished slightly lower on Tuesday as investors started to shift focus to U.S. jobs data for August due on Friday. The release will give investors a chance to estimate when and how the Federal Reserve will begin tapering its bond purchases. Economists expect 750,000 jobs created in August and the unemployment rate falling to 5.2%. As such, the S&P 500 lost 0.13%, the Dow Jones Industrial Average fell 0.11%, and the Nasdaq slipped less than 0.1%. Asian equities were mostly higher on Wednesday despite losses seen in the U.S.-China's Caixin Market Manufacturing PMI, falling to 49.2 last month from 50.3 in July versus 50.2 expected. Furthermore, a sub-index for production fell to 47.7, the slowest pace of expansion since February last year. Nevertheless, the Shanghai Composite Index gained 0.65%. The Kospi and Seoul added 0.24%, while Sydney's S&P ASX 200 shed 0.1%. European stocks edged higher on Wednesday despite fresh signs of weakness in Asian economies. Also, investors shrugged off higher than expected Eurozone inflation data, with the CPI surging to a 10-year high last month. Fresh data out of the Eurozone also showed the IHS Markit's final manufacturing PMI falling to 61.4 in August from July's 62.8, below an initial 61.5 flash estimate. In Germany, retail sales slipped by 5.1% month-on-month in real terms against a forecast of a 0.9% fall. This followed gains of a 4.5% in June and 4.6% in May. The Pan-European Stock 600 ended the session up by 0.5%. Stocks eked out some modest gains on Wall Street overnight, pushing the Nasdaq Composite Index to another all-time high. A survey by ADP showed companies adding jobs at a slower pace than expected, with private sector employment increasing by 374,000 jobs from July to August. As such, the S&P 500 rose 0.03%, the Dow Jones Industrial Average fell 0.1%, and the Nasdaq climbed 0.33%. The dollar saw another bearish session on Wednesday, with the pressure intensifying following disappointing jobs data ahead of the key Friday jobs report. The figures hinted at delayed tapering by the U.S. Federal Reserve, adding to a less upbeat tone surrounding the greenback. Against this backdrop, the EURUSD surged to fresh nearly one-month highs around 1.1860 before retreating marginally. On Thursday, the pair retains a slight bullish bias though the momentum has slowed as risk sentiment turned mixed. Asian equities were mostly lower on Thursday as investors waited for U.S. jobs data. Also, concerns grew over the Chinese economy after a run of soft data. Still, the MSCI's broadest index of Asia-Pacific shares outside Japan edged up 0.2%. The Shanghai Composite Index rose 0.67%, the Nikkei 225 in Tokyo gained 0.20%, and the Hang Seng in Hong Kong shed less than 0.1%. The Kospi and Seoul lost 0.81%, and European futures were slightly lower in early trading. Meanwhile, oil prices edged lower on Wednesday after another failed attempt to hold above the $72 figure despite OPEC Plus's relatively harmonious decision to gradually raise supply and a relatively bullish U.S. oil inventory report. The previous and current plan for the group is to add 400,000 barrels per day in output for its members in October in response to an increase in oil demand and falling crude oil inventories. According to the EIA, crude oil stockpiles fell by 7.2 million barrels to 425.4 million barrels last week. On the negative side, crude oil production rose by 100,000 barrels a day to 11.5 million barrels a day, the highest since May 2020. That is all for today. Thank you for watching. Please subscribe to always be in touch with the latest market news.